I didn't catch the weight.
How big?
Healthy baby girl.
Good to hear.
Yeah, her baby girl was back home, so,
All right.
yeah. Three daughters in the center chair.
What's her name?
Marie Rose.
Very nice. Okay. Cool. Good afternoon and welcome to the February Crop Production and WASDE briefing. My name is Lance Honig and I serve as chair of the Agricultural Statistics Board at NASD. This briefing is for the Secretary of Agriculture and other policymakers at USDA to better understand the content and context of today's reports. We are very pleased to have USDA's Deputy Secretary, Stephen Vaden, joining us today. We also welcome Dr. Justin Benavidez, USDA's Chief Economist. Before I turn things over to our presenters, I do have a few notes for our live streaming audience. The Office of Management and Budget provides specific guidance on how these important reports, the crop production and WASDE reports, which are considered principal federal economic indicator reports, are to be released. OMB statistical policy instructs policymaking officials to refrain from making public comment regarding the content of these reports within 30 minutes of their release. Therefore, we will not be taking questions from the public during this briefing. Both NASS and World Board staff are available for phone or email questions, and NASS will host a social media event at 1:30 Eastern Time this afternoon. We strive to have everything presented at this briefing match the official record. However, should there be any discrepancy, always refer to the official published estimates. With that, I'll turn it over to Anthony Perlman, Acting Chief of the NASS Crops Branch. Anthony will be immediately followed by Dr. Mark Jekanowski, Chair of the World Ag Outlook Board. Anthony?
All right, thank you, Lance, and good afternoon and welcome. I also want to welcome all those who have joined the live stream today. All right, and my briefing will be very short since the only new information NASS released today was an updated forecast of 2025 U.S. Sugarcane production. Now, for this month, the only changes made were in the state of Florida. Now, nationally, harvested area is forecast at 949,000 acres. That's up just 0.5% or 5,000 acres from the previous forecast, and up 3.2% from the previous season. The average yield for the 2025 crop is forecast at 37.8 tons per acre. That's up 0.8% from the previous forecast and up 1.1% from 2024. And then production is estimated at nearly 35.9 million tons. That is up 1.4% from the previous forecast and up 4.3% from 2024. And then if realized, this will be the highest U.S. production since 2020. Now, that was the only data slide I had for you today, but we're looking ahead at some of the upcoming reports that NASS will be releasing on February 13th, our Farms and Land and Farms report. February 20th will be our next cattle on feed. On February 26th, we'll be releasing our 2024 Census of Horticultural Specialties. That is a follow-on to the 2022 Census of Agriculture. On February 27th, we'll be releasing our monthly ag prices. March 2nd, our CARES report. March 5th, our small grain county estimates. That's always highly anticipated. And then we'll be back here on March 10th for cotton ginnings and the next crop production report. Now, I know you two are fully aware of the upcoming Agricultural Outlook Forum. But for those online, we do want to remind you that USDA will be holding the 102nd Annual Agricultural Outlook Forum on February 19th and 20th at the Crystal Gateway Marriott Hotel in Arlington, Virginia. Now, this will be a hybrid event, and information about the forum and a link to register can be found at the URL on this slide. All right, as mentioned earlier, Lance will be on X at 1:30 today for Stat Chat, answering questions about the numbers in today's report. So with that, that concludes today's NAS briefing. As a reminder, today's report and all NAS reports and data can be found on our website. So with that, I will turn it over to Mark, who will cover the WASDE.
All right. Thank you, Anthony. Okay, I have a little bit more information than Anthony had to share with you today, but typical of most February WASDEs, changes this month are relatively minor across most of the commodities. We'll talk a little bit about obviously domestic balance sheets and also focus on Brazil soybeans and Malaysian palm oil. Slides ahead. But let's start first with global wheat production, down just a bit this month, but still record large. The main change this month, main thing to focus on here is Argentina. Harvest is now complete. Huge crop in Argentina, as you can see there, up 9.3 million tons year over year. And this is based on AgMin data. And in a partially offset by, more than offset by a reduction in turkey sweet production, and that is based on an FAS gain report. Balance sheet, global balance sheet, again, fairly small changes. Feed use down 500,000 tons this month. That mainly reflects reduced feed use in Canada based on their recent grain stocks report, and also lower feed use in Turkey based on the lower production there. Global trade raised 2.2 million tons this month, and that again is mainly Argentina, reflecting that huge crop they had there. Argentina exports were raised 2 million tons to 18 million, just reflecting those big supplies, which is putting some pressure on their prices, making them very competitive globally. U.S. wheat balance sheet, small changes. The only new information we incorporated this month was the information from the recently released flour milling report. Reduced that 5 million bushels, and that just raises ending stocks by the same amount. Made no change to our season average price, and this point in the year, about 3/4 of that crop is marketed. Moving into rice, even less to talk about here in rice. Small change in Cambodia production. That's just based on a post report. There, global rice balance sheet. Again, pretty small changes here. Global trade reduced 200,000 tons. That is mainly a reduction in exports from Thailand, where prices are relatively high relative to other Asian exporters and India. So that reflects that reduction there. U.S. rice balance sheet, a few changes to talk about, mainly all focused on trade. We reduced our import forecast by 1 million hundredweight. We're seeing a relatively slow pace of long grain imports relative to last year's record pace. And exports as well, relatively slow export pace, particularly for long grain, rough rice going to Western Hemisphere markets. On the other hand, that was partially offset by increased sales of medium short grain to Japan. So the result is a 1 million hundredweight increase in ending stocks domestically. And we also raised the season average market price, all rice price, by 30 cents per hundredweight. But that again reflects differences in across the classes. Long grain rice class on long grain was unchanged. The support came from higher price for medium short grain. Moving into corn, a few things I'll point out here. Mexico corn production down a bit this month. That is an area adjustment for their winter crop. And that reflects some constraints on irrigation availability. So expecting to see less area planted there because of that. And then the change in the European Union, that is actually focused on France, a small increase there based on harvest results. Global balance sheet, we talked about production already, feed use up a bit. I'll focus here mainly on trade. Global trade raised 1.4 million tons. That is mainly an increase in the US, which we'll talk about on the next slide a bit. Partially offset by lower corn exports from Ukraine. Our Ukraine corn export forecast, we lowered 1 million tons down to 22 million tons. And basically that reflects some internal logistics challenges based on damage from infrastructure damage due to the ongoing conflict there, making it hard to get corn to the port and therefore constraining their exports to some degree. On the other hand, globally, corn imports were raised for Turkey, Lebanon, Mexico, and Iran. That is reflected in that higher feed use for those countries in particular, partially offset by lower feed use in the EU because of reduced imports from Ukraine. Global ending stocks tighten up a bit this month, mainly tighter stocks in the US, partially offset by higher stocks in Ukraine. So on the US corn balance sheet, the only change we made this month was to our export forecast. Continuing to see very robust sales and shipments of US corn, basically to all the usual suspects, top markets for US corn, Mexico, Colombia, Korea, Japan, etc. So with that export strength, that tightens up ending stocks by the same amount, down 100 million bushels. We made no change this month to our season average market price. All right, let's move into soybean. Soybean production globally up 2.5 million tons, and that all reflects increased production forecasts for Brazil and Paraguay. That whole region, Brazil and Paraguay, very favorable conditions, growing conditions this year. So we're looking at higher yields, and in Brazil, also looking at higher area based on state level reporting in Brazil. So combined, Brazil and Paraguay increases in both add up to 2.5 million metric tons more soybeans produced this month relative to where we were last month. I'm going to talk a little bit about Brazil because this is obviously an area of focus of the market right now. Harvest is underway in Brazil, of course, and important to note, just as a reminder, so production in Brazil, the season starts from the north, moves to the south. So, so even while harvest might be finishing up in the center west parts of the country, it is still the crop is still in development stages in the southern part of the country, Rio Grande do Sul in particular. And what we're looking at right now is a little bit of dryness emerging in the in Rio Grande do Sul. So this is precipitation specifically in January. Some dryness across the whole country, but this follows a very favorable precipitation situation for December and up until January, supporting production throughout most of the country. The only possible risk here is that in Rio Grande do Sul, given that this is the last area of the country to harvest, and those beans are still in development stage, there are some potential concerns for some yield reductions there. And it's reflected as well on a rainfall trace, so the red line being cumulative rainfall for 2025. As you can see, started out very strong early in the season, but then dried out a bit. A little bit dry in January, but important to point out, still some, periodic, timely showers and rains in that part of the country, holding the quality of the crop presumably fairly stable. And we can also see that based on the NDVI, looking at the vegetation. Vegetation in Rio Grande do Sul still looks relatively favorable. A little bit of dryness in Paraná and further north, but in fact, that is actually a favorable condition for harvest up there. So the only potential concern, again, is in the southern part of the Brazil, but generally speaking, given the early good rains and expectations for timely showers moving ahead, we expect yields to be maintained in that part of the country as well. So with that, favorable conditions throughout nearly all of the country. Yields are very strong. We widespread favorable weather, increased yields, increased area, again, based on state level reporting. And this brings production up 5% year over year to a new record. And in fact, area, yield, and production are all forecast to be records this year in Brazil. Now, I also wanted, since we're in talking about oil seeds, I also wanted to talk just a little bit about Malaysia palm oil, obviously competing vegetable oil for soybeans and other oil seeds. Malaysia, of course, the largest global producer of palm oil, produced both on the peninsula and over here in the Sabah and Sarawak areas. Most of the production is concentrated in this part of the country. And with palm oil, palm production today tends to reflect weather conditions experienced 6 months to a year ago. So when we look back at precipitation this time last year and through the spring of last year, we see very good favorable rainfall, especially in this major area of production in Malaysia. And because of that, we're starting to see now very strong production, palm oil production, October through December. Typical seasonal pattern, but these yellow triangles are this year's production relative to past years. And as you can see, for December, for example, we are production is running about 23% above last year and 26% above the 5-year average. So conditions look very good for palm oil in Malaysia. And with that, we raised our palm production by 3% from last month, which would put us 4% up year over year and about 8% above the 5-year average. All right, so back to the soybean balance sheet globally. We already talked about soybean production up 2.5 million tons this month. The other variable I'd point out, global crush, we raised 1.6 million tons, and that is all focused in Paraguay and Brazil, especially Brazil. And that's also reflected in strong soybean meal exports to the EU. We made no change in global trade this month, and ending stocks globally up 1.1 million tons. And that is essentially all concentrated in Brazil, given that record large crop there. Now for the US, no changes to the domestic balance sheet. We are aware of there's some potential for more sales to China based on recent statements by the president. As of right now, we believe that higher sales to China would likely be offset by lower sales to other destinations, leaving global trade unchanged. And this month, we also kept the season average price unchanged at $10.20 per bushel. Cotton production, again, relatively small changes this month. The main country to focus on here, I think, is China. we consistently have been increasing our forecast for China based on very favorable weather and growing conditions in the Xinjiang region of China, which is the primary cotton producing region within China. But now we're starting to get classings data from China, and that is just further confirming what we suspected to be a large crop and even exceeding those expectations. So we raised that forecast again this month by 500,000 bales, now at 35 million, and that's up 3 million bales year over year. So China is looking to produce a very large cotton crop this year. The balance sheet, global balance sheet, again, pretty small changes this month. Main thing I think I'd point out, consumption, global cotton consumption, we pulled back this month. That mainly reflects a 100,000 bale reduction in Pakistan, along with several other countries, based on just a slower pace of imports by those countries. Global trade down, reflecting lower exports from the US, which we'll talk about in a minute, offset by higher exports from Australia, but also some other small changes across several countries that leaves the net reduction in trade down about 60,000 bales this month. So US cotton balance sheet, as I noted, lower exports from the US this month. This is just based on the pace that we've been observing. Commitments are down about 12% from where they were last year at this time. So just a slow sales pace, meaning we brought that export forecast down this month. Prices down as well, dropped our season average price 1 cent per pound. And as you know, cotton prices have just been under a lot of pressure lately. Just as an interesting item to note, nearby cotton futures have closed lower for 20 of the first 25 trading days of 2026. So seeing some real pressure there. And that's reflected in this lower season average market price. All right, now we're going to move into sugar, starting as we always do with domestic sugar balance sheet. I put up the back year here for just to note fairly large adjustment in the domestic deliveries this month, reduced by 187,000 short tons. And what that reflects is actually some real vigilance on the part of USDA, who some of the staff were investigating some anomalies. They found an error in the way a refiner was reporting shipments, and they were reporting shipments to other refiners as domestic deliveries. So that overstated domestic deliveries in that data. We corrected it this month. It has no impact on total use or ending stocks because it's balanced off by a different category that isn't in this noted in the slide, but basically a miscellaneous category. But what it does show is that domestic deliveries, domestic demand was not as strong as we thought it was because of this accidentally misreported data. Now for the current crop year, 2025, 2026, we raised cane production 29,000 short tons, and that's mainly Louisiana based on manufacturing report there. Imports reduced this month, 50,000 short tons. Imports reduced 12,000 short tons. TRQ imports reduced 50,000 short tons, and that reflects an expected shortfall by the Philippines, who reported that they are going to be unable to meet their commitment. So that is the reason for that shortfall there. High tier imports, on the other hand, we raised 39,000 short tons, and that just reflects raw sugar as it arrived. So a shipment of raw sugar that came in, and that's what we do with raw sugar. We report it as it comes in. So as that came in, that's reflected in this 39,000 ton increase in high tier. So when you add it all up, increase in production, some reduction in imports, ending stocks were raised just 17,000 short tons this month. Mexico balance sheet, really not much here to talk about, mainly just some changes based on reporting from the FAS Post to Mexico City, who advised a small reduction in Mexico's production forecast and imports as well. Ending stocks for Mexico tighten up 40,000 metric tons, and obviously there is no change to their shipments to the US. All right, now let's move into meat and livestock. So I put up, again, obviously moving into calendar years now. 2025, I put up the production numbers this month for 2025. Those are now final. So the small changes there were just truing up to official data. And that sets the 2025 production estimates as final. For 2026, you see an increase in beef production this month. And this reflects the information from the cattle report that was released January 30th. Now, as you might recall, the cattle report showed overall tighter cattle supplies, but it also showed higher supplies of cattle outside feedlots waiting to be placed. So that 190 million pound increase in beef production reflects cattle that are currently being placed in feedlots. In the first half of this year, it will become beef in the second half of this year. Pork broilers and turkey, small adjustments there just based on truing up to recent slaughter data. For pork, we're looking at higher production for the first half of the for the first half of the year. And broilers and turkey, those adjustments are based on just the first quarter of this year. Prices, steer prices up strongly this month. We raised our forecast $4.50 per hundredweight, increased our price forecast for all 4 quarters of 2026, just based on those tight supplies. Hogs as well, we increased $2.25 per hundredweight, reflecting what we're observing is strong pork demand and also support from those very high beef prices, providing some support to pork demand and hog prices as well. No change in our broiler price forecast this month. Turkey price, we raised 1.3 cents per pound, just reflecting an increase in the first quarter price based on recent data. U.S. meat trade. Now for 2025, again, I kept that up. Trade data, this is reflecting truing up to trade data through November. Just reflecting the recent pace there for the primary species. For 2026, couple things to note. Imports we raised this month. Imports remain strong, reflecting tight U.S. supplies. Of course, strong demand for continued strong demand for beef, and it also reflects the recent agreement with Argentina to expand their import quota. So all those factors helping to boost the beef import forecast for 2026. Pork exports we raised this month, 50 million pounds. Mainly we're seeing a lot of some good strength, export strength to Western Hemisphere markets, Mexico, Colombia, others in Latin America. And also worth noting with some African swine fever outbreaks in Spain, that's taking some of that some of those potential exports from Spain off the market, providing some increased opportunities for US to be even more competitive in export markets. Broiler export forecast, on the other hand, we reduced 45 million pounds and again, just focused on recent pace. And in this case, we are seeing a lot of competition from Brazil in the poultry export market. All right, we'll wrap things up here with dairy. 2025 production up just a bit. That is now the final number, final data there for 2025. 2026 milk production raised 300 million pounds. That reflects entirely increased output per cow, milk per cow, while inventories, on the other hand, are kind of flat to declining. So all of that production increase is based on higher productivity, higher output per cow. Trade, fat basis and skim solid basis, dairy product trade. Main story, I think, in here would be butter. So that's fat basis exports, lower imports, higher exports, reflecting the fact that we have very strong butter supplies and relatively low prices, giving us a competitive edge in export markets, but reducing the need for imports to some degree. Skim solids basis trade, exports down a little bit. That is just recent observed trade, mainly in lactose and casein. Not a whole lot of story there behind that I'm aware of. And finally, dairy product prices up kind of across the board this month. But keeping in mind, especially for like cheese and butter, what we're basically seeing here is a rebound, a modest rebound from quite a steep recent decline in prices. So prices have come down a lot. They seem to have bottomed out and then have been increasing a bit over the past few weeks. So that reflects those prices there. Non-fat dry milk and dry whey, just like last month, that we're continuing to observe a strong domestic protein demand, and that is supporting the prices of those products. Higher product prices reflected in the higher class prices, class 3 and class 4, and the all milk price, which of course is derived from those class prices. So the all milk price for 2026 now forecast at $18.95 per hundredweight. Last year, it was $21.17 per hundredweight. For 2025, that is the final estimate. We trued it up this month, raised it 2 cents to that current level. And the 2026 price, as you can see, is down $2.22 per hundredweight year over year. And that's where I'll end it. I think that hits all the high points from this month's WASDE. So happy to answer questions. And for folks on the live stream, thank you for attending. And we will see you back here next month. And that concludes this month's live stream.